We're in a bear market. I like to anticipate bearish things. I know hopium enthusiasts out there like to hope for good things, hope for rallies, hope for bear market bottoms to be in, but we're in a bear market. And I want to sprinkle in throughout this video some realism. And before we dive into this Bitcoin chart and what's happening here and the data involved and the Bitcoin warning signs on this chart, I want to just define that. Realism, the attitude or practice of accepting a situation as it is and being prepared to deal with it accordingly. My question for you, fellow crypto holder, are you accepting the situation as is? Are you prepared to deal with it accordingly? What's the situation? This is what the situation is. The situation is we're in a crypto bear market. Yes, we've been here before, but we're in a crypto bear market in the middle of macroeconomic events that a crypto bear market has not lived through just yet. Put aside all the Bitcoin charting data that suggests that the bottom still might not be in. Put that aside. But look at the global scale and what's happening right now. So I do want to bring some realism into this. And by the way, this is my opinion. This is how I'm seeing things, right? I would absolutely enjoy if the bottom was in and we start just even sideways until we enter the bull market. I would enjoy that very much. But the data from what I'm seeing is just putting up a lot of red flags and caution flags for me personally. So I'm just hanging out here, tracking the bear market with you and waiting for bullish confirmations if they come, but none have come yet. And so let's dive into this video to set the tone for what's going on. And by the way, US dollar currency index kind of seeing some green as of late. You see the daily candles breaking breaking to the 20-day moving average, and right now just hovering just above the 20-day moving average. It's a big deal, big chart to watch. But this is what has happened today. Dow falls 700 points. As Powell says, there's a ways to go for rate hikes. The Dow had risen more than 300 points immediately after the hike as investors clung to a line. And this is funny. They clung to a line in the press release indicating that the Fed could soon factor in the impact of rate hikes on the stock market as optimism for less hawkish plans. Hopium enthusiasts, they just loved it for a second there. They loved it. It is very premature, in my view, to think about or be talking about pausing our rate hike. So let's focus on all of the other stuff and what Powell said. We have a ways to go. The S&P is down 21% year to date, on pace for its worst year since the Great Recession. Has crypto lived through something like that? It hasn't. And we're in it. We're in the middle of that storm. We're in the middle of that crypto winter. Despite Powell's tone, many experts still expect the Fed to slow rate hikes following its next meeting in December. The hopium enthusiasts, they love that. They love that. Potentially slowing rate hikes. And it is a good thing. If it happened, it's a good thing because there's going to be this bottoming out. There's going to be this rounding out of the markets, and it's going to happen probably sooner than later. But we're in the eye of the storm right now. We have to pay very close attention to everything that's happening. Crypto winter only going to get worse. Co-founder of Tezos Blockchain says, this was an article from today, November 2nd, and you can see the ongoing crypto winter is only going to get worse as the industry recalibrates to a higher interest rate world, according to the co-founder of blockchain platform Tezos. It's such a good way to put it. The crypto industry is calibrating to what is happening in the world around us. And this is really something at this scale, at this level, that has not happened yet for crypto. So tracking these crypto cycles, this is brand new macro data, and it's extremely beneficial to us as macro-minded investors. It's extremely beneficial to me as I track these markets. There was a lot of easy money going into the system, and I think it was artificially stoking a number of different things, mainly valuations of these companies. So I think there's a lot of cheap money, and I want to read this real quick because I think it's important for crypto holders, and we're going to look at the Bitcoin chart. Cheap money that went in, valuations went super sky high. You had people scrambling to make those valuations justified in some form, usually through cheap tactics like yield farming. And now that the easy money's gone away, all that's left is we're getting communities. I hope. And I definitely echo that sentiment. All that's left is we're getting communities. I hope. And we're seeing it. I mean, if you're on Twitter, if you're on crypto Twitter, even if you're on crypto YouTube, You might be noticing that. You're seeing communities begin to form. And even within communities, you're starting to see smaller communities form. They're bundled up together around the campfire during this crypto winter. And that's what's happening right now. Builders are building, communities are growing, they're becoming stronger. The foundations of communities are becoming stronger. But yet here we are, we're in this crypto winter. And this is really a really good picture of the blizzard itself. This is a long-term Fibonacci. I wanted to chart it because we're going to use this entire range right here on Bitcoin. This is the roadmap for me in terms of crypto in general. If I'm looking at altcoins, I want to watch this. This is the chart. So I always talk about this 786 line down here. I talk about, I think I'm personally waiting for Bitcoin to fall below that area before I start looking at, hey, the bottom is in. We're going to talk about short-term upside actually in a few minutes, but I want to talk about this 786 line, and I want to talk about what's happening within this range right here. That range is the long-term Fibonacci. So I'm zooming out on the daily just so I can chart this for you very quickly. And this is what it looks like. If we take our long-term Fibonacci from the last bear market low, right back here in 2018 to the all-time high that Bitcoin has seen, you see that green rectangle. That's what we're looking at there. The 618 line around 28,000 to the 786 around 17,000. I'm going to get rid of that. So what I want you to note is how long has Bitcoin been in that range? Bitcoin kind of saw support right here at the 618 top end of that range for a while. It was nice to track while it was happening. Would have been great if Bitcoin just would have saw support and just boom, just continued up to the upside. But obviously that's not the world that we live in. The world that we live in would not allow that. And we fell into the Fibonacci actually very quickly to the 786 line. Now, historically, as you know, if you've been watching my videos, Bitcoin falls below this line as it bottoms out. And that's what I'm waiting for. It's no guarantee, obviously, but that's what I'm waiting for. And here's what I want to note real quick. Around 145 days, Bitcoin has been trading within this range, meaning this channel, this macro 786 to 618 channel that we're looking at here, around 145 days. I want to go back to the last cycle low, and I just want to show you something. Bitcoin traded in that range. If we have our date range here, we can put it right around here. And this was, August 2018, 241 days. This is 241 days. Bitcoin traded in this Fibonacci range that you see on the chart. Not only did it trade there in this range right here for 245 days or below the range itself, bottoming out below the 786 line, but even before that, you can just see Bitcoin was actually spending some time already in that range for a while. So the Bitcoin bear market of 2018 was harsh. It was freezing cold. It was freezing cold. If we actually go, even with all of the events happening in the world right now, and we go look at Bitcoin right now, I'm kind of like, wow, this is not even as cold as the crypto winter of 2018. It really isn't. And even if you look at all-time high to where Bitcoin is right now, the downside has not been as drastic, right? Just about 76% at one point to the 786, right above the 786 line. I think it was 70, probably around 76% to 78%. So this is where Bitcoin is right now, not even as harsh. So what does this say to me? This says to me, not only because, I think that the 786 line will be broken. I've been talking about that a lot. It's just something on my personal radar screen. I share it with you. It's my opinion. But not only that, but the case for that happening, besides all of the headlines that we're seeing, and besides just the fact that there's more downside for equity markets, besides all of the narratives that the crypto winter is only going to get worse, besides all of that, when we go to the Bitcoin chart and we compare just the charting data to 2018, this chart says things are probably going to get worse before they get better. Meaning not only are we going to just break the 786 line, right? Potentially, I should say that because listen, I realize this is my opinion. There's just no guarantee. I'm just publicly tracking this data. That's risky business for me because there's a lot of people that just like, especially if I end up being wrong and we don't fall below the 786 line, there's just a lot of people, they will hold that over my head. But I really don't care. This is just me tracking the data with you. We did the same thing in 2018. We got pretty close in terms of just finding that bottom, and we're doing it again here. So not only the 786 line is in play, but it's just the time frame that Bitcoin has fallen and been in this entire Fibonacci range. It's not been that long. And so that too suggests the fact that Bitcoin has some more pain to go. Now, I want to bring up just kind of the shorter term charts. This is a daily. Let me get rid of this rectangle so we can see it a little bit more clearly. You all know what we've been tracking with this chart. Let's take a quick clip from, this wasn't that long ago. This was like 2 weeks ago. Talk about what resistance is ahead, but maybe we have a month to the upside rally and then we're getting rejected and then it's falling below the 786 line. But there I go talking about that 786 line again, but this is what we're talking about. And you can see Bitcoin wasn't yet breaking out of this triangle just yet, but it certainly did get the move. You can see it, Bitcoin breaking out of that triangle on the weekly, hitting the 20-week moving average, that green moving average right there. And then we talk about, what do we talk about? Not only do we talk about, well, Bitcoin kind of breaking out to the upside, but just revisiting these trend lines or breaking the 786 line. That's going to depend on what happens over here with the US dollar currency index. Is this going to rally? Is it going to rally to the upside? Is it going to break? I mean, even right here, you can just kind of see kind of this trend line. Is it going to rally through that, or is it going to continue consolidating to the downside? If it does, and if stock markets and equity markets rally, if that happens, right, and here's the S&P 500, if this kind of just maybe retests the 20-week moving average, if there's some type of rally, and you know how just back and forth these markets can be, here's where we are on Bitcoin. There's still room for rally for Bitcoin. We don't have to get the pullback, the true pullback, right now. I mean, this move out of this upper trend line for Bitcoin, only just about, 6% or so to the upside. Now, we can get a move all the way up here to the 200-day moving average. And then we're talking about a move of to the upside from that breakout, 23, 25%. Then we could be getting just that throwback all the way back to just trend lines down here, 786 line down here. So we have to give this time. We have to be patient. Just because I think the bottom is not in and we could definitely fall in this range doesn't mean it's going to happen now. We could enjoy gains to the upside before it happens. And so that's why tracking this is a mental thing for me. There has to be a lot of just fortitude, consistency, and waiting for the data to play out. And that's kind of what I'm doing in these videos, because this is the story that I really want to track and I want to see how it plays out. Because no matter what happens, whether I'm right or wrong, the 786 gets broken and we fall down, or it gets tested and bounces up, or it never even gets tested again, Bitcoin just breaks out into the bull market. No matter what, that information, if we zoom out on this chart, this long-term Bitcoin chart that we've been tracking for years, that information will be crucial, so beneficial, so useful for us to continue to make macro-minded decisions. And that's why I track this data, so that I can just watch this. I enjoy creating the content, and I can just make sound, calm, macro-minded decisions. That's why I'm here. That's why I'm doing this. So this is the data on the Bitcoin charts intermingled with everything going on in the world right now. It's crazy. There's a lot. It's gonna take continued patience, everybody. But that's why we're here, to be patient, to learn, and to kind of just go through it, bundled up as we kind of grow through it as well. So let me know your thoughts below. I know everybody has so many conflicting opinions about what's happening. I appreciate you just kind of bearing through all these videos with me. I've been sick. I'm a little better now, but my voice is just, you can hear it kind of shot. So thank you so much for watching. Hit the subscribe if you're not a subscriber. Hit that like. It means a lot to me. I'll see you in the next video. God bless.